What are the advantages and disadvantages to co-signing with someone on a house? What are the risks you take? And what are the effects of those risks and what can happen as a result? That's what we're going to talk about in today's video. My name is Cameron McCown. I'm a loan originator and I know what it's like to not own a home. That's why I want to share these videos with you so that you can be a homeowner and you can help live you can work toward living the American dream for yourself. So anyway, I talked to a lady this morning. She's co-signing with her daughter. She's looking at co-signing with her daughter. And she asked me the same question, like, why, what risk do I take in doing this? And here's the answer. For somebody that's co-signing, I really look at whether they are actually going to help the person they're co-signing with or not to qualify. And the way that we do that primarily is through what's called a debt to income ratio. In other words, is the co-signer's income high enough relative to their monthly minimum payments on their credit report to even make co-signing make sense? In this situation, the daughter could qualify herself for about $80,000-$85,000 just on her own. Okay, she wanted a higher pre-approval amount, so she asked her mom to co-sign with her. So in talking to her mom, I looked at her mom's income and I obtained a credit report for her mom. Her mom didn't have too much in the way of debt, and so her income can be used. Now, if her mom's debt was like half of her income, it wouldn't really make a difference for her to co-sign. But in this case, it was lower. So I was able to use her mom's income without having to include a lot of her mom's debt because her mom didn't have a lot of debt. She owns her own house, but she didn't have a lot of debt besides that. And so in this case, it's a net benefit or a net positive to the daughter for the mom to co-sign. The question though is really, is it a net benefit to the mom? The answer, it is up to the mom or to whoever. If you're co-signing for somebody, you are going to be on the home loan. Right, you're going to be on title, I believe, and depends on by state whether you're on title by default or if the person who you're co-signing with needs to quit claim you onto title. But you will be at least be obligated on the loan. So if the person you're co-signing with does not make the payment, it's not just that your name is there; it's you are responsible for that payment yourself. And so you need to have an understanding and have a trust relationship with the person that you're co-signing with, that if they don't make the payment, they tell you and you're going to make the payment, or really that they're going to make the payment. Now, they can always, let's say the daughter in this case gets a higher, a better job, right? More income, more money, or lower debt, pays off some debts. She can refinance that loan and get her mom off the loan, and her mom is no longer at that point obligated to make the mortgage payment. So in this case, probably they're going to proceed. I got the mom's agreement. The mom agreed to co-sign. The daughter wants her to co-sign. The daughter's going to be able to buy a house for the first time. The daughter's 40 years old, and she's going to be able to buy a house for the first time because her mom is co-signing with her. Now, we're not using any of the mom's money, any of her assets. We could, but the daughter has enough assets on her own. We just need the mom to co-sign. So the mom is what's called a non-occupying co-borrower, and that's a term that has some specific rules with it. But just in terms of co-signing versus not co-signing, those are the benefits. Those are the risks. That is what it can mean to you. And I hope that you have learned something, gained something from this video. Take care. Talk to you later. Bye.